A couple of months ago, people did not believe yen was going down. Everybody thought yen was a safe haven currency. Now it's popular to say yen is going down, but I don't think it's going down a lot more from here in the short term. And I think what's going on is that Japanese currency has been supported by trade surplus. But even though the country has a competitiveness problem, now I think going forward, the trade surplus is turning to deficit because of the demographics. So while Japanese companies have not gained the competitiveness, put these two things together, yen is on a long downward trend, and the deflation reflects declining competitiveness. It's not just a monetary policy issue.
Well, nobody expects anything to change today with BOJ coming out. This is Shirakawa's last meeting officially, right? Everybody's waiting for the April 4th. With Kuroda, but even Kuroda says that things are not going to be easy to achieve that 2% inflation rate.
Yeah, I think that the market is like impatient. It's a swing from one to the other. Nothing changes fast in Japan. I do not believe that the yen's decline in the future will be driven by government policy. It will be driven by fundamentals. Basically, Japan will be a deficit country. And Japanese companies, unless something happens miraculously, there's a miracle that the Japanese companies are on a roll again.
Well, you say automakers and electronic exporters are, these are the two big tethers for Japan's economy, but this kind of, this strength that they have is not going to be forever. That competitive weakness is starting to emerge. Yeah. How is Japan going to have to deal with that? You say Japan's government is not going to be the one to do things.
No. I think that the issue is that with the government structure, the same people always at the top. And the Japanese kind of society is very hierarchical. And Japan really needs a bottom-up revolution to allow more capable people to rise to the top, both at the political side as well as the corporate side. I think that unless you see that, Japan is not being revived.
Okay, so does that mean, well, I guess we have to talk about the Bank of Japan. I just want to get back to what Angie was saying, the last meeting here. How much can we really at the moment lay at the door of inaction by the Bank of Japan in recent years for the current state of the Japanese economy? And would you rate it as being probably the worst developed, central bank in the developed world?
Yes, I think the QE, they may do a bit more QE, but its impact is going to be limited. The reason is because in the U.S. the QE works because a lot of Americans like to play with money, all these hedge funds. If they hear QE, they go out punting something. Japanese don't do that, so I'm not sure QE is going to have a significant impact.
But I want to ask you about QE because you say that U.S. dollar strength is going to impact Asia economies. That once we start seeing QE 3 and 4 subside, that outflow is really going to start to bubble up concerns and crises in Asia?
I think so. I think that Bernanke is going to leave next year. And the next Fed chairman is not going to be someone like him printing money every day. I don't think it's not going to be that kind of chairman anymore. So the dollar is on an upward trend. That's going to be like for 5 years. And here we have become very bubbly during the weak dollar era. So when the dollar, the trend reverses. Yeah,
you're saying it's reversing, and it'll reverse once they end this bond purchasing program, this 85 billion. And you're saying there's going to be a bull run then for the dollar.
It's already reversing because the dollar is.
Is that because everybody else is stimulating? Is that why?
Yeah. Also, the U.S. economy has improved, and also the Bernanke is going to leave soon. So the market needs to anticipate that.
But what are the weaknesses that you see for Asia's economies? You say that, we're going to start seeing these crises emerge.
Yeah, that's right.
Like what?
It's basically, during the weak dollar era, people tend to borrow a lot of money. It's happened every time. This time it's the same. You see all these bond issuances. The volume is huge. Why do people issue bonds? Because they cannot issue stocks. Why couldn't they issue stocks? Because they are not doing well. So somehow you're not doing well, you're borrowing a lot of money. That does not sound a very good situation.
But if you take a look at the Dow and how it did, and a lot of investor optimism not counting today with a lot of profit-taking that we're seeing, we saw outflows from gold ETFs into equities. There's confidence there.
Yeah, I think that
from investors even.
Multinational companies have done well because the multinational companies have abandoned this investment-driven model. They have been doing arbitraging. So I think that's sort of, they buy something cheaper from China, that they use technology to process that into some high value added stuff. So the multinational companies have done reasonably well. So I think that the stock market performance over the last few years is justified.
But when we see the record Dow, but we don't take into account things like, well, interest in that time, inflation during that time, dividend payments in that time.
Valuation.
So we could go much further up from here, couldn't we, even?
Yeah, I think that the U.S. market now is at average historical valuation. So it's not like cheaper like a couple of years ago. But certainly, I think that when at this kind of valuation, while the global economy is not great, I think the upside is limited. So the people who are chasing now, when they see records being made, then they start to chase. Usually, it's not good. It's not a good strategy.